Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock, let's go over the market, let's talk about what is happening on yet another green market day, and I'll give you my thoughts moving forward on Tesla stock. So with all that being said and done, ladies and gentlemen, if you enjoyed the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section is live on YouTube. That link is down below for just $2.99. You get access to all my intraday thoughts, posts, updates, technical analysis, options flows, etc. on Tesla, and sometimes just the broader market as a whole. So if you're interested in that, definitely check it out. That link, of course, will be down below. I'm actually going to talk about this in the video. For just $2.99 a month. For $5, though, you get access to all of that, plus my NVIDIA daily updates as well. But yeah, let's jump into it. Tesla closing the day up about 0.7% on the day, closing at just shy of actually $230 per share, which unfortunately, compared to the market, is definitely a little bit of an underperformance, right? It is what it is. So, Tesla's definitely struggling a little bit. This is why I was saying yesterday, if there's a place to start struggling, it's pretty much here in the low to mid 230s, right? And that's exactly what's happening. Even with the market strength, Tesla should be up pretty much what NVIDIA's up today, right? About 2%, which if it was up 2%, for instance, let's say it did follow just the market and, it wasn't lagging behind the market, it would actually be closer to about 233 almost dollars per share. So, sometimes it just kind of is what it is. But let's talk about what I see moving forward. So Tesla is definitely setting up a very interesting situation here, right? In my opinion, it's honestly getting pretty damn close to, like a do or die scenario for Tesla, right? Does it continue that, next leg up? Does it continue higher? Does it go to the 240s? Or does it get a very massive rejection here and potentially continues downwards in a bearish trend, right? That is the main question. So I'll give you my thoughts, right? So, like I said, 230, 232 to 235, that $2 to $3-ish range, give or take, right? It's just going to be a massive area of resistance, right? It had a massive area of resistance before where, we came up to it right over here, got rejected, massive move down, came up again just recently, literally on Thursday, massive move down. That's technically a possibility once again, right? There is a chance that we reject here again and we just completely crash once again, right? That is a real possibility. So you want to be really cautious about that, in my opinion. Now, I'll give you a potential catalyst for the bulls that actually may give a little bit of hope very soon. But let's finish the daily chart. So, again, the most important thing really moving forward tomorrow, next week, however long it takes, really, 232, 235, that $3-ish range. Crucial for Tesla to not only get back above, but start closing above, right? So you can see, for instance, we have never closed a daily candle above 232 even. Honestly, that's why I said 232. Even 232 is enough, right? Even closing a daily candle above 232 can be good. But if you really want more solidified confirmation of, for further continuation upwards, honestly, breaking the recent high pretty much at 235 will be a change of character, right? And that would mean Tesla will most likely continue pushing forward and higher. That's just kind of, it is what it is, right? That's pretty much just like simple technical analysis, really, right? And if it does, the main levels I'll be looking for is going to be roughly the top of this rising wedge or bear flag, whatever you want to call it, which will pretty much put Tesla in the mid to low 240s, right? Really depends. Again, this is just drawn roughly, right? You can also argue the fact that it's actually supposed to be like this the whole time. Tesla has, beautiful room up to about that 245 gap fill, also a possibility. So it really just depends on how you draw. That's why, I'm very loose with trend lines, right? It's just very subjective. But that's kind of the main thing I'm looking at, right? Closing above that, at least on the 1 hour. Let's take a look at the 1 hour here really quickly, right? You can see the 1 hour, actually the 1 hour did actually close 1 hour candle at about 234. So you definitely want to see some candle closures above 234, 235 on the 1 hour, or a daily closure at least above 232, because again, it never was able to do that before. And that would be a sign that the bulls are definitely coming in still and, are still in control of the stock, right? So that's the main thing I'll be looking at. But there are some caveats, right? It's not just going to be that easy, right? So actually, you know what? Before we get into the caveats, aka the bearish side, let's talk about one more bullish thing here, right? 15-minute chart. Watch for this one, honestly, as early as tomorrow. This will most likely play out tomorrow, like morning. We're in a rising wedge, right? This 15-minute chart, rising wedge, right? It's a small rising wedge, so don't expect anything too crazy. For instance, if we break out of this rising wedge, pretty much if we start closing, in my opinion, at least 15-minute candles, honestly, above like 230.5 to 231, that would, in my opinion, be enough to play out this small rising wedge. Again, it's a small one, but nonetheless a small rising wedge that actually can send Tesla to retest that major high I've just been talking about, closer to 234, 235, right? Like the top of the range, right? That's what I think this rising wedge will do if it breaks to the upside. If it breaks to the downside, expect Tesla to most likely bleed tomorrow back down to about 224, 225. That's really for tomorrow's, playbook, if you will, right? So we'll see how that plays out. But that's pretty much the upside and the bullish scenario, right? I mean, the technicals are still there. MACD is still there, still making higher highs, right? You still have the RSI looking, all right, I guess, right? You have a stochastic on the daily still pointing straight up, right? You have the BX trender still making higher highs on the daily. So like the bullish momentum hasn't completely faded yet, right? There's definitely more work for the bears to do before they really show any signs of a reversal. But if there is a place to show signs of a reversal, if there is a place for the bears to come in and smack the stock down, it again, like I said, 232, 235 is that place to do so. Now, let's say it does happen. Let's say the bears do come in. Let's say Tesla does reject. And let's say just gets a massive rejection and just starts crumbling down below, right? Maybe as early as tomorrow, next week, who knows? But let's say just it does happen at some point or another. The thing I'll be looking for is pretty simple, right? If Tesla goes below 224, 225, you can probably expect it to come down to the bottom of this trend line. This one I actually like. This one is much more solidified than the upper one. The upper one I'm a little bit less certain about where the actual upper trend line is. The bottom one is a lot more certain in my opinion, right? I mean, you can make an argument the fact that the bottom line is more certain. It's more laid out. And essentially, if we break, like I said, below 224, 225, well, expect us to most likely come back down to retest the bottom of the trend line, which will be somewhere around, I mean, it depends on when it happens, but we'll say 218, 219, right? Very important level, which Tesla, the past couple of days, yesterday and the day before that, has come down into that, 218, 219 range. And both times it's found a pretty damn nice bounce from there. So crucial level to hold just from that typical support resistance, horizontal support resistance perspective, but also it is that bottom trend line. It does not want to break below, because again, like I said before, maybe like a week ago now, let's revisit this overall topic, right? There's still characteristics of a bear flag is what I'm trying to say, right? There's characteristics of a bear flag that is potentially still playing out. So this can still be something that the bears are salivating over, essentially, right? Because again, if we take the Fibonacci from this recent swing high to this recent swing low, you can see, we have so far actually come up pretty darn close to that 618 Fibonacci retracement, which is pretty much around 236. We came as high as 235 and a half almost, right? Like we've been pretty much right around that 618 Fibonacci. And again, if there's a place to reject, that is the place to reject for this bear flag, right? And that's exactly what we have so far rejected, which is why I even more so want that 235 like upper limit, if you will, roughly, to break, because that will make Tesla most likely still short-term bullish, and we most likely will make that extra leg higher. But if we cannot take out that 235-ish range, that 618 Fibonacci retracement, which is still very much intact and still has a pretty, in my opinion, strong, conviction, I guess, to have this bear flag still be a bear flag and still play out in that fashion. Again, very, very important level. So, make sure you're very closely watching that. But again, if we break above that, I think we're heading to probably this gap fill 245, and it even puts this 265-ish range in play as well. So, we'll take it one step at a time. That's the bearish side, right? This bear flag, this is still very much a bear flag. This still can definitely play out. And again, a measured move on the bear flag, usually just very simply, again, don't take it with a grain of salt, of course, but is you take the pull, and this is pretty much the pull, right? This is roughly the pull of the bear flag. We had this massive move down that was, pretty quick, right? Pretty damn quick. Now we're getting, again, this still has the characteristics of a dead cat bounce, or in other words, creating that bear flag, right? We've had 5 touch points, right? We had a 1, 2, 3, 4, and then we have come down for the 5. So we could be getting a small little retracement into a massive fall. Like that is a possibility. Like you can't completely ignore that aspect of this chart, right? That is a very real possibility. Even if we have a massive bull trap, I think the craziest thing to happen for Tesla would be if there's a insane bull trap. And what would that be? It does break above 235. It does come up to this top of the channel, and then it gets smacked back down very quickly. A lot of bulls get trapped entering on this change of character, and we just crash. That would be probably the most complex, most trappy move I can imagine. I don't know if it'll actually happen, but if I were to imagine the most evil thing to do That would be the most evil move to do, in my opinion. But nonetheless, regardless of what happens, right? The point is the fact that, you know, this still has the characteristics of a bear flag. This still has the characteristics of a dead cat bounce, and this still can definitely play out. So like I said, the measured move, take the pull, and then let's just say we break down somewhere around here, like, I don't know, around just this general vicinity right around here. You know, this will bring Tesla pretty low. Like, again, just the pole measurement is very rough. I actually don't think we'll go all the way that low, but at the very least, like, I would be surprised if we ultimately, like, 170s, 180s, like, I'd be pretty shocked if we don't come down to that level if this plays out to the downside. We'll see if it does or doesn't. Still way too early to say. Nothing's confirmed yet. This can still break to the upside. That is still a possibility. So obviously this requires patience. But just keep in mind, right? Maybe a mental note, or just be mentally prepared that that is a very realistic possibility. In my opinion, it's kind of a coin toss. But if you were to look at just strictly, you know, patterns, this is still very much a bear flag. And in my opinion, the bears have a slight upper hand here until we break above that range. Like I said, 235 to 620 Fibonacci, that general range. Until we break that, the bears have the upper hand, in my opinion, until the bulls say otherwise. So yeah, just watch out for that. That's, you know, in my opinion, pretty damn important to pay attention to. That is potentially a very, very big issue that can come forward. And, you know, coincidentally enough, we have this, right? This chart right here. Let me zoom in a little bit here. Right, what does this chart show? Right, it shows S&P 500 seasonality, right, from 1976 all the way to 2023, right? So pretty much last year, right? What does this mean? Well, what this means is the fact that you can see the kind of, you know, light blue line is pretty much just really any regular year. The dark kind of bluish sort of line is our year. This is the year we're in. Why? Presidential election year, right? And this is a spicy election. To say the least, this is a spicy one. What does this show though? Well, it shows that, you know, the first half of September actually pretty bullish, and so far it's been pretty bullish. Obviously there's still more time, which is why I wouldn't be surprised if we do get that one more pump higher, because there is still some more time to get this one extra little pump that you can see towards the end here, which is like that top. But then come the second half of September, and especially October, we have a massive market correction. Okay, not massive, but definitely a market correction, right? The market definitely tops out mid-ish September and begins its decline pretty much until November, right? So again, just take it for what it's worth. It doesn't have to play out this way. It's not guaranteed. This can be an anomaly. Maybe this time is different. Who knows? But again, probability wise, statistically, it is not in the bull's favor as we slowly approach the next week or two, right? As we slowly get to the second half of September, things start getting toppy and we start making our way back down. Again, we'll take it level by level, day by day, week by week. Nothing is guaranteed. But if you were to use any, you know, if you were to look at this and put any amount of weight, I guess, into it, we're entering what could be a pretty bearish month and a half, we'll say roughly. So anyway, the reason I bring that up is because if Tesla does play out this bear flag, and it does ultimately, it's not going to be a straight crash. It's not just going to go, you know, like, it's not just going to do straight that. Obviously, it'll have bounces. It'll have, you know, it'll have move, you know, of course, right? But the point I'm trying to make here is the fact that if this seasonality does play out, if this does correct, I mean, that'll pretty much line up quite well with this bear flag to make its way lower to about the 170s, 180s. Worst case scenario, 150s to retest that green trend line all the way down over there, which if we do get there, that's a pretty impressive opportunity once again, in my opinion. But all in all, that's what I'm seeing right now moving forward. So let me know what you think down below, ladies and gentlemen. But thank you all so much for watching, and I'll see you for the next one. Peace.